Hey everybody, it's Dow Jones Dave, and this is my weekly Dow Jones Industrial Composite report. My proprietary barometer crossed 100 on Monday. As you can see, it was 98 on the previous week's close. Monday it opened at 101. It went to 102 on Tuesday, advanced to 103 on Wednesday, and the market went into decline at that point, and the barometer has just gone up since then. So even though the market declined, the barometer is still rising, which means conditions are getting stormier, and it's going to be probably raining stocks. That's my prediction. Now, I'm not an investment advisor. What I am is an option trader, pretty short term, but I wasn't always an option trader. This work here you're looking at is part of the type of work I did when I actually managed investments. Not much. I had $50,000 under management and about 6 clients. And unfortunately, most of them, I couldn't afford a secretary, and a few of them wanted to have sex with me. 2 of those were gay, and I had a friend who's gay tell me, he's gay, and he wants you. And I'm like, really? I don't even think about stuff like that. But anyway, that's off subject. That's just part of my history. And how I learned about the stock market was by hands-on. And it's been a long time. Now I'm an option trader. But I know a lot of you just want to buy stocks and never sell them, especially Dow type investors who are looking for the yield, dividends. Why do people concentrate on the dividends on the Dow Industrial Composite so much? Well, savvy people, it's because each and every Dow component pays a dividend, and each and every Dow component raises their dividend every quarter, unless the economy gets really bad under the hood, and then you see dividend cuts and things like that. Now, in my last video, I talked about this thing, the payout ratio, and it's dividend stress. This is putting stress and pressure on the companies to lower their dividends because they're taking up too much of the earnings. This payout ratio is dividends divided by earnings. So basically, this is more than one third of the actual profits being paid out in dividends. And we're going to see the effect on that in a minute. So it rose to 50.50%, 15 basis points over the week. That doesn't affect the barometer directly, but as you will see, it does have an effect. Now, 2 weeks ago, 12-month earnings, that's 12-month trailings, that's the last 4 quarters, not fiscal year, was 1547, down 14.8% to 1418.40. This week, those earnings, this is a year ago, versus the last year, this same period, i.e., 8/04/2022 is the full year. So the yearly earnings dropped by 14.8%. Now that's annual. That's not a quarterly drop. That's important to understand about this report. We're tracking 12-month trailing 52-week earnings. They dropped 15.4% to 15.4% this week, and actual earnings dropped looks like around $7, $7.50 or so, which isn't really a significant drop, but it's a drop, and you don't want to see the earnings in the Dow Industrials dropping like that. So, and notice the yield has gone up, and that should have a negative effect on the barometer, but it didn't. The barometer still went up. So, PE is 25, 24.8, but still 25. It's still high, especially considering you've got dropping earnings. And now also look at the dividends. last week. This week, 712.58. That's a drop of 50 cents, just about, eyeballing it and rounding off. So dividends dropped too, and the dividend growth rate fell from 7.80% to 7.53%. We don't like that. So that was this week. Now let's get a look under the hood for this week. Okay, here are the three events that affected the numbers that way. Caterpillar grew its 52-week earnings by 18.77% in one quarter. That's pretty powerful. But on the other hand, Merck dropped its earnings from 512 to 127, minus 75% on the 52-week, 12-month trailing full-year earnings. That's brutal and a lot worse than that is good. And Intel is the culprit for the slowing growth rate on the dividends and dropped its dividend, and this is 12-month dividend, from 122 to 98, minus 19.67. So we've got one really bad event, one blowout bad event, one very good event, and one really bad event. Dividend cuts are bad. Now on the other side, that's going to free up, 24 cents to add to earnings next quarter. So the fact that they're cutting their dividend will be accretive to earnings. So, they may show a false earnings growth where if the difference in this quarter and next quarter's in this quarter and the next quarter's earnings is approximately 24 cents, then you'll know it came from the dividend and didn't really grow. So that's just my thoughts on Intel. The charts, Caterpillar's coming down. It's 1, 2, 3. 1, 2, 3. It's way overdue to break the trend. Usually they'll break after 3. This is a technical failure. And technical failure is when a pattern fails, i.e. this head and shoulders, it should actually be a bull in its horns, because the head's shorter than the shoulders. And it failed to break, and look what happened. It's a technical failure. It's also buy the news, buy the rumor and sell the news. Intel is still in an uptrend, but you want to watch for it to break this trend here, retest, and then you'd want to short it. Merck and Company, I don't know. Looks like it's due for maybe a little rally to me. Kind of really sold down, but it really had bad. They really had bad earnings. So, we already know, because the barometer's at 107, you're not making any long-term investments. In fact, you might be either selling some stocks or you might be buying puts to hedge your stocks. So, intermediate term, unfortunately, we've broken all the trends overhead, and we'll get into the technical analysis right now. But I wanted to go over this. I'll be doing this every week, by the way, but possibly not on the YouTube channel. I've started up a Patreon, and I will do YouTube videos that give samples of what you'll get if you patronize me. Patronize? I hate that word. If you become a patron. I'm thinking like $10 a month for access to certain information, like maybe this section here, which is pretty hard to compile, but I figured out a way to do it reasonably efficiently. This will give you everything that happens on the Dow in the week that it happens. So it's a little plug for my future Patreon. Anyway, I think that's about it for that. Now let's get into the technicals. So here's, let's go up to the monthly first. Monthly, we have this trend going right here. And that's drawn on closes. So it goes from here to here and here. This little mark is approximately, as best as I can remember, where my barometer hit 0. So 0 and under is a raging buy. However, 100 or over is kind of a raging sell. And I don't know what it did here, what the numbers were, because the archives I need to reproduce my barometer there went behind a paywall. Not everything I need, but some key things that I need are behind a paywall. So we're never going to know what it was here. But my bet it was about 100. I mean, 0. No, it wouldn't be 0 here. You need more of a decline to put it to 0, something like this. So anyway, what do we have here? This is a longer term trend on the monthly, and it looks like if we break through this stuff that I've got drawn, and we'll look on the smaller scale chart, if we break through this stuff, then we're coming down to the trend line again, and it's only it would only be the second hit on the trend line, so the indicator would be to move up from there. But on the short term, let's take a look. Here's the 1 day. We've got this very weak trend, and it is a trend though. You can barely see it. There's a little bump there, and really unhealthy trend. I was wondering if it was going to make a head and shoulders, but it didn't even bother because this was it. And I didn't really think that little bump there would qualify as a first hit with the size of these moves, but I guess it did. And but anyway, this trend had already broke, so you knew to be careful. Once this one broke, now there's nothing until we get down to 3,400, 34.5, 34.4, 34,400. And this is, remember, a weekly thing. And this here is also a weekly thing. What we have here is a bull in his horns. Here's his head, and it's lower than the shoulders, which makes it a bull in its horns. Just a variation on a head and shoulders that's more devastating when it breaks. It's worse than a head and shoulders. Let's put it that way. And I like shorting this kind of stuff. So they're really, it could catch a little rally here and catch a relief rally, but once it gets through that, there's nothing for like 600 points. So that's the short-term outlook. Go back to 1 day. Yeah, there's just, I think we're almost assured to hit this. I mean, especially when you look at the numbers I just put up, they don't bode well for future reporting as time goes forward. And almost every week something happens. Either one of the companies pays a dividend, or one of the off quarter, like fiscal years end in different months than the standard months, and you get reporting from there. So this is a good way to track the market. Tell you the truth, you get a lot more change in these numbers, and the Standard & Poor's only updates quarterly. So when you're looking at the Standard & Poor's, you're looking at last quarter's numbers until they finally release the composite quarterly earnings. So anyway, I follow the Dow because of that. The information's much more up to date than you can get on any other index, at least where I know to get the information. So I'm not going to disclose my sources, but they're accurate. You can compare the earnings I put up to the PE, to the, divide the earnings I provide to the PE on any weekend, and, divide the Dow Industrials by the earnings I provide. And you'll get the PE, and you can look at what they say the PE is, and it's going to be the same. So, yeah, you can also divine the earnings by dividing the price by the PE. Yeah, it'll give you a rough estimate of earnings. Won't be quite exact. Anyway, I'm out of time.